Good morning, you're watching The Mint, I'm Andy Hodges. Let's have a quick look at closing prices on the Zimbabwe Stock Exchange. African currencies, commodities, metal and energy prices. In our main story this morning, the Zimbabwean government says its top three priorities for the year 2020 are food, power and currency stability that are all intended to address the economic challenges the country is facing. This follows an undoubtedly hard-hitting 2019 that saw the economy decelerating, stemming from a myriad of turbulences caused mainly by El Niño-induced drought, leading to an unfortunate 2018-2019 summer cropping season and poor dam water levels that resulted in a spike in hydroelectricity outages. The same year saw the southern eastern parts of the country being ravaged by fierce Cyclone Idai. All happened to a government that was fighting to restore sound macroeconomic fundamentals, predominantly the reintroduction of the local currency, the Zimbabwe dollar. Government has since moved a notch higher, setting priorities for the 2020 economic year, focusing on the emergency areas. The Minister of Finance and Economic Development, Minister Professor Willie Walsh, said, "The objective of the government is that citizens have access to food, basic commodities, including access to electricity. Government will arrange these in the first quarter of 2020, setting aside resources to import commodities, which include food, maize, wheat and soybeans, in order to meet the national demand." He indicated that government is accelerating the issuance of licenses to power producers in solar and mini hydropower production. He also highlighted that government is working on stabilizing the local currency, said Professor Ngube, and I quote, "The exchange rate for the last 4 months has been stable and the government is working to keep it that way." The Mint spoke to Persistence Gwanyanya, an economist, and these were his thoughts on money supply growth.
Indeed, Reserve Bank's priority should be price stability. This is the major mandate, the key mandate of Reserve Bank all over the world, is to ensure price stability. So in our case, this was the mandate before, and it seems last year we have lost the battle, or the battle is still continuing on price stability. This year, we expect a measure of stability coming out of monetary issues management that Reserve Bank, together with the Monetary Policy Committee, is going to come up with as measures to stabilize the money supply growth in the economy. So everywhere and anywhere, inflation and price stability, instability is a monetary phenomenon. So we expect from where Reserve sits and from its mandate, we expect them to control money supply growth, which is a major factor on price stability. But obviously, money supply growth is influenced by what happens at Treasury, what happens with the fiscals. We expect this year some significant pressure to come out of Treasury, to come out of the fiscals from the circumstances that we're facing on the ground. It's most likely that we're going to experience drought today, this year, and this is going to have significant implications on the money supply growth.
Reducing inflation and maintaining a stable exchange rate are the Reserve Bank of Zimbabwe's top priorities in the new year to bolster President Mnangagwa's drive to increase production, grow the economy and create more jobs. RBZ Governor Dr. John Mangudya said that he expects the economy to continue responding positively to the policies that government is implementing. The long run of primary budget surpluses since the advent of the Second Republic has allowed the alignment of fiscal and monetary policies. Dr. Mangudya conceded that last year was genuinely tough, not words I would have used, but said the central bank was bullish that 2020 will be better. I quote, "Our message at the central bank is very clear. Our key focus areas are on currency stability and reducing and stabilizing inflation in Zimbabwe. To stabilize the exchange rate, there was need to achieve a balance between the supply and demand for foreign currency."
The challenges we currently facing post the currency reforms, which has seen an increase in prices, which has seen depreciation of our currencies. This has also necessitated the need for subsidies at government level to support the vulnerable members of the society. Subsidies are going to also result in some increase in money supply growth due to the burden on fiscals. So if not well managed, we are expecting to see significant pressure on price stability coming out of subsidies. The government has already indicated that it's going to be subsidizing 7 essentials in the country. The other key issues that would militate against reserve banks efforts to deal with inflation and price stability is the issue of the legal issues coming as a result of the increases in prices themselves this year, and also the monetary expansion experienced in 2019.
The Zimbabwe government's thrust must be on productivity, economic growth and job creation. Government has, among other issues, promised not to spend more than it earns from taxation on its day-to-day expenses and reserving borrowing only for a portion of the capital account. Huge monthly deficits were at one time funded with short-term treasury bills that increased money supply, resulting in a surge in inflation and a falling exchange rate. We are joined this morning by Golden Sibanda from the Business Weekly. Golden, there's no doubt there's a correlation between money supply growth, inflation and currency depreciation.
Yes, and we all know that the level of money supply is fundamentally, and underlying the word fundamental, is the main driver of inflation. The other factors, but the level of money supply in an economy fundamentally really determines what direction the inflation takes. So
now,
it's
let's
going
be
to
a bit simple.
important.
Money supply, real money. What is that?
That's the amount of money in circulation in your wallet, on your cash account, in your bank, and every other form of money that is easily convertible into.
Now, if we look at the 7 months up to what, January through to what, September, October,
yeah, sure.
Money supply went up by what, 80%?
By almost 80%, and yeah, sure.
And we did see a direct correlation in inflation jumping up to 175% in June and possibly 400% by the same when you go to August, and also the exchange rate dipping from about 11 to 16.
Yes, and you can see the effect of inflation on both exchange rate and the effect of money supply on both inflation and exchange rate. Once you have too much money in circulation, you're going to have a negative effect on inflation. Inflation is going to go up, exchange rates are going to move up because there's too much money lying around, which drives inflation, because the demand for foreign currency and goods increases, thereby increasing the exchange rate and inflation.
But money supply will grow naturally. The trick here is to keep it under control, possibly at around 10%.
Yes, of course. Indeed, there are standard thresholds or rates by which money supply should go, because this is this correlates to the level of economic activity in the economy. So it should not be undersupplied or oversupplied, because that then upsets economic fundamentals. So you should have a level of money supply that actually equates or correlates to the level of economic activity.
Okay, so finally then, to maintain control of money supply, what should Treasury and what should the Reserve Bank do?
There is need for Treasury to make sure that they spend within their budget. There is a plan in every Treasury as to what it needs to do over a particular period of time, and they should stay within that limit and avoid overborrowing or spending beyond their means. The Reserve Bank as well has got a duty and responsibility to make sure that the amount of money in circulation should be that which is just enough to support the level of economic activity, not too much to the extent of actually driving inflation or exchange rate that upsets major economic fundamentals and yes.
That was Gordon Sibanda from Zim Paper's own Business Weekly. Turning to the availability of physical cash from banks, Dr. Mangudya said the Reserve Bank would continue to drip feed the market. He said the Reserve Bank was happy public confidence in the local currency continues to rise. He further urged people to continue using plastic money. As more cash trickles into circulation, it is expected that the gap will be eliminated, making plastic money more attractive on security grounds. The correlation between money supply growth, inflation and currency stability are there for all to see. So it is imperative that the Reserve Bank and Treasury continue and maintain their efforts to keep money supply growth in check. And although subsidies to cushion the most vulnerable citizens will remain in place in key areas, once again, such subsidies must be managed effectively. CBZ Holdings has separated with 6 key managers as part of a restructuring program, reports The Anchor. In an internal information circular dated January the 8th, 2020, Chief Executive Blessing Madhavanu said the group has embarked on a restructuring program which has resulted in the separation of 6 executives in key positions. Madhavanu said, a restructuring program has been embarked on. As such, I would like to advise you of the separation with 6 executives in key positions. He added that business continuity had been planned for and business would continue as usual. The 6 positions affected are Group Finance Director, Group Risk and Compliance, MD Microfinance, Divisional Director Retail Banking, Managing Director Insurance and Group Human Resources. CBZ has a new lead shareholder and chairman, and further changes even at board level are expected. The group has also boosted this team through the creation of CBZ Agro Yield. It has also been joined by Lawrence Nyazema, formerly of First Capital Bank, who is now the Executive Director, Wholesale Banking. Needless to say that retiring 6 key executives at once is an unusual step for a financial institution. Ivory Coast, Côte d'Ivoire, leads the world in production and export of the cocoa beans, used in the manufacture of chocolate, something we love. West Africa collectively supplies 2/3 of the world's cocoa crop, with Ivory Coast leading production at 1.8 million tons as of 2017, and nearby Ghana, Nigeria, Cameroon and Togo producing an additional 1.55 million tons. Ivory Coast overtook Ghana as the world's leading producer of cocoa beans in 1978, and today is highly dependent on the crop, which accounts for 40% of national export income. The primary non-African competitor of Ivory Coast is Indonesia, which went from having almost non-existent domestic cocoa industry in the 1970s to becoming one of the largest producers in the market by the early 2000s. The West African nations of Ivory Coast and Ghana, which combined produce more than 60% of the world's cocoa, have banded together to form their own chocolate-coated version of the Organization of Petroleum Exporting Countries. Like OPEC, whose control over crude oil output has largely driven global oil prices since 1960, the decision by the world's top 2 cocoa producers to join forces is expected to raise the cost of chocolate bars, ice cream, and cake. The 2-nation chocolate bloc has decided to charge an extra $400 per metric ton of cocoa, which is currently trading around $2,500 per metric ton. COPEC, as some in government and industry have dubbed the new partnership, is already stirring confusion and unease in the $107 billion global chocolate market. The new premium, the second attempt to create a cartel in the cocoa market in the last 50 years, is due to take effect in October. Cocoa traders and brokers call the plan the biggest overhaul of the global cocoa market in decades, from its start with cocoa bean farmers to its finish with consumer grabbing a bar of chocolate. Analysts believe that if the cartel is successful, it will generate more and enhanced financial benefits, not only to the Ivory Coast and Ghana, but also to the main growers of cocoa beans, and that is African small-scale farmers. The Standard Kenya reports that Safaricom is investigating complaints from several subscribers that fraudsters attempted to con them of funds from their mobile accounts using the company's official customer care number. Subscribers took to social media with complaints of receiving voice calls with the callers claiming to be customer care agents from Safaricom and even confirming personal details such as M-Pesa transaction history. One subscriber identified as Steve Muriri on Safaricom's customer care Twitter account asked, "I got a call from this number, an outright conman trying to extort info from me about M-Pesa, Mswari and KCB M-Pesa. It is your staff are now using that number or because I think this is your official number." Another user identified as Njeri Mukuria asked how a caller had access to her personal details including date of birth, place of residence, the details of the last 3 M-Pesa transactions, login details such as PIN and PUC numbers, as well as information on their mother. The incident has raised concerns over the company's exposure to fraudsters and the safety of subscribers' personal data, particularly on the successful M-Pesa platform. Last year, a subscriber filed a class action suit against Safaricom, the Central Bank of Kenya and Communications Authority of Kenya over outages experienced on the M-Pesa network. Martin Muriru claimed Safaricom failed on several occasions to maintain full uptime on its M-Pesa network against its license conditions and failed to give a satisfactory or explanation for the downtime. This came just months after another lawsuit filed at the High Court against Safaricom by a subscriber who claimed his personal details and those of millions of subscribers had been leaked to a third party. Telsa Inc. shares have surged to start 2020, helping the electric car maker become the most valuable US automaker ever. The company closed Monday with a market value of $81.39 billion, surpassing Ford Motor Company's peak of $80.8 billion set in 1999. Shares of Tesla jumped sharply last week, rising 4.9% by the time the market closed. The stock's gain adds to a bullish run over the last 3 months, and it follows optimistic commentary from an analyst. Tesla stock, which hit 556 within 12 months, Argus research analyst Bill Selesky said in a note to investors on Tuesday. That price target is the highest on the street, and it's up from his previous 12-month price target of $396. The price target implies a 13% upside on Tesla stock. Selesky cited better than expected fourth quarter deliveries and the rapid construction and subsequent start of Model 3 production at Tesla's factory in China as key reasons for his optimism. Notably, Tesla recorded a record 112,000 vehicles in quarter 4, which was 6,000 more than analysts expected. The company also said that the demonstrated production run rate capability of greater than 3,000 units per week at our new factory in China, excluding local battery pack production, which began in late December. Shares of Tesla have been surging in recent months as it became clear that the electric car company was making substantial progress on its factory in China. The automaker started delivering China-made Model 3 units to employees at the end of December, and it began deliveries of these vehicles to customers in the market this week, serving as a catalyst for the stock's rise earlier this week. In total, shares are up 11%. Now Tesla will need to follow through on investors' high expectations and quickly ramp up production and deliveries in China. The BBC reports that Willie Walsh, Chief Executive of International Airlines Group IAG, the owner of British Airways, has announced he is to step down. He is set to retire as Chief Executive and from the board of IAG on 30th of June 2020. Mr. Walsh said it had been a privilege to have worked on the creation of IAG, and British Airways and Iberia were merged. Antonio Vazquez, IAG's chairman, described Mr. Walsh as one of the main drivers of the project. Mr. Walsh became the British Airways boss in 2005 and is ending a 15-year career with the IAG Group, which also controls Aer Lingus and Vueling. He will step down from the role in March before retiring in June this year. Willie Walsh is a long-standing figure in the aviation industry. He joined Aer Lingus in the late 1970s as a cadet pilot. He gradually worked his way up through the ranks to work in flight operations and was appointed as Chief Executive of Aer Lingus in 2001. Luis Gallego, head of the group's Spanish division Iberia since 2014, will succeed Mr. Walsh. Mr. Gallego will take over as head of the holding company British Airways after the airline saw major disruption last year. For the first time in its 100-year history, BA pilots went on strike in a long-running pay dispute. In November, dozens of British Airways flights were also delayed or cancelled because of a technical issue. The airline also faced a £183 million fine in July for a customer data breach. The UK's flag carrier also dropped to 55% for customer satisfaction for both short and long-haul flights in a recent survey by consumer group Which. This was well below EasyJet and several other budget airlines. I'm Andy Hodges, and you've been watching The Mint. Please follow us on our Facebook page, Zim Papers TV Network, our website, ztn.co.zw, and YouTube under ZTN. Your comments, of course, are welcome via our Twitter handle at ZTN News and on Facebook. Join us here on The Mint every weekday morning at 6 a.m. Central African Time. Well, that's it. Goodbye. Have a profitable business week, and you all be safe.